Welcome to session 3 of the Traders Bootcamp. This session focuses on trade management, managing trades like a professional. We will guide you from being a struggling trader to becoming a professional trader. Here's an opening truth. Two traders can take the exact same entry. One is profitable and one is not. The difference is trade management. Bad management turns winners into losses, while good management turns average entries into profit. A valid entry is a checklist, not just a feeling. First, ensure the structure is confirmed. You need a clear market bias. Second, price must be at a valid zone, a confirmed structural level. Thirdly, a confirmation signal must be present, such as a candle pattern or liquidity sweep. If even one of these three is missing, do not enter. Stop loss placement is a science, not just guessing. Your stop loss tells the market, if I am wrong, this is where I accept it. For a buy, place it below the demand candle. For a sell, place it above the supply candle. Never use random pips. Your stop loss must be based on where the trade idea becomes invalid. I call this the invalidation point. Always give stop loss room to breathe slightly beyond the zone to protect accounts from wicks and unnecessary spread increase that might just take you out. Set your targets before you enter so you know where you are going. The first target is usually the next structural high or low. This is the most reliable method. Or you could aim for 1 to 2 risk to reward ratio. Always check for obstacles like unfilled fair value gaps, imbalances, or opposing demand or supply level that might limit your move. Partial profit taking means closing part of your trade at an early target and letting the rest run for more. Enter with full position. At partial, you close about perhaps 50% of it, which could be in some case 1 to 1, or the first structural target, you take partials and move your stop loss to break even. The remaining position can run for targets like 1 to 2, 1 to 3, or even the next key level. You are now trading with the market money. Knowing that you have secured your profit, you are risk-free on the trade. This is what we call partial profit taking and moving stop loss to break even. Letting winners run. This is the hardest discipline. Most traders close winners too early out of fear and let losers run too long out of hope. You should do the opposite. Do move your stop loss to break even after partial profit and trail it behind the structure if you wish. Only close the position, the remaining position after you have taken partials at a structural level, at a reasonable level that follows with your setup. Trust your setup. Avoid closing early because price pauses or moves to your stop too soon. Do not watch P&L, the price of how much you're making or losing, and react emotionally, or change your target mid-trade without a structural reason. Only stick to structure. Trade with structure, trade with risk management, trade with discipline. Managing drawdowns means staying alive. A drawdown is a normal part of trading, and how you respond matters. Set a daily loss limit and stop if you hit it to prevent revenge trading. Reduce your lot size doing trades of losing streaks. This could help you protect your capital and help you find your rhythm back. Review losing trades without reacting emotionally to see if the setup was valid and if you followed your rules, which is very important. And never chase losses. Your judgment is compromised when you are down, so the best thing to do is to rest first and then trade later. The key message is simple. Entry is important, but management determines profitability. Two traders, same entry, different management results. For our session exercise, we walk through a real trade from start to finish. Follow the 5 steps. Firstly, before you take the trade, define your entry criteria, the reasons for making that trade. Determine your stop loss placements, where your stop loss will be. That is the invalidation point. Then look at your targets, where the trade has the potential to go to. Determine your targets and the risk to reward from that target. At least it should be a minimum of 1 to 2 before you take that trade. And then you decide on your partial profit strategy. Make all these decisions before you take a trade. And thank you. Now see you in the recap of the next session.